we have a lot of questions, advanced questions sent by our customers. And I'd like to ask them one by one. We've grouped them together by categories. And we would like to ask them. So I'll probably point to each one of you, whoever I'll ask pertaining to these questions. Can we look at the advanced questions and see what are they asking? Oops, number one, COVID-19. Tanong ni Michael, how will this growth story be affected if there will be another lockdown? Sir Habito, paano pag nag-lockdown ulit? Paano yung 5 to 6% natin?
Well, obviously, hindi kakayanin. We already saw a glimpse of that in the second quarter of this year, when, because of the return to ECQ, especially in Metro Manila. If you remember the quarter-to-quarter GDP graph I showed, it actually went down in the second quarter. So in reality, even though we were so jubilant about an 11.8 and subsequently revised to 12% year-on-year growth, the economy was actually going down at the time. And that was because of precisely the Delta surge. So heaven forbid that this Omicron variant will lead to another thing like that. And if you're to believe some accounts, it could be worse because the Omicron mas matindi daw yan eh. So I don't know. But the short answer is yes, it will disrupt this nascent recovery. And so the momentum that we could be getting can obviously be lost again.
But sir, ito medyo vaccinated na rin most of our population, di ba? Para bang ditong Omicron daw doon sa unvax lang eh. Do you think magla-lockdown pa kaya tayo even with, sabihin na natin, cross our fingers, medyo nagkaroon ng Omicron dito?
Actually, one thing is sure. I don't think our government will want to do the drastic lockdowns that we have done in the past year. And as you know, more recently, as they call it, more granular lockdowns are being applied. So that very localized now. And that's because they've realized that, and it's very well known that the Philippines is now seen to have imposed the most stringent restrictions and lockdowns in the world even. Naturally, tayo din yung pinakapangit na recession in the world na nangyari. Yeah. So because the government will be less inclined to do that kind of a drastic response, maybe we won't see as bad a disruption as happened. In fact, the other thing I'd like to point out is, first of all, to be very honest, akala ko bababa pa tayong lalo ng third quarter eh. And the reason for that was mas lalong tumindi yung lockdowns ng third quarter eh. In fact, we were already seeing GCQ in Metro Manila in the second quarter, in June to be exact, no? And then nag-ECQ nga ulit tayo in the third quarter, sometime in August or so. And yet, tumaas pala ekonomiya. That's why many of us analysts were really caught by surprise. But my own explanation for that is that iba na yung definition ng ECQ ngayon kaysa the definition ng ECQ a year ago eh. Meaning, in terms of the enforcement, mas obviously, mas maluwag na kahit na ECQ pa ang nasabi nila. So, all of this will help mitigate the effects of a possible new surge. Aside from the fact that government will consciously avoid being as stringent as they were. Kasi yun ang naging enemy number one ng ekonomiya natin. Yung stringency na yun eh. Yung higpit
kahit na may ECQ, lalabas pa rin ng mga tao ngayon, but they're more careful now. Tama?
Yes. And of course,
they're more...
Bakunado na pati eh, kaya malakas na loob natin.
Oh, okay. Let's look at the other group of questions. Next, marami pa tayong tanong dito. On inflation, I think it was already explained. How does inflation affect investments? Tanong ni Ram, or will we have wage inflation? Sir, eto nga, are we going to have wage inflation in this cycle? Or will this be mostly driven by oil, LPG prices, and supply chain shortage? Tanong ni Monski. Sir, Habito.
Well, let me take a crack at that. The very reason BSP and the government in general is afraid of further acceleration of inflation is that it's likely to trigger wage increase demands from the labor sector. And if we do that, mapipilitan ng gobyerno to again mobilize all the tripartite wage boards all over the country. And of course, almost inevitable, once ginawa yan, tataas ang wage rates, again, minimum wage especially. And that indeed can trigger wage inflation. Right now, it's all because of African swine fever and then the domino effects of that. But if it now starts getting into wage increases, yan yung as they say, mag-snowball talaga yan. So I think that's the reason why Bangko Sentral sees it as very important not to succumb to the temptation, which is very strong, to already tighten monetary policy. Kasi nga, as you know, it's a trade-off. Masasakal naman ang ekonomiya pag tumaas ang interest rates. But at the same time, they have to, perhaps what needs to be done is make sure the guys who are responsible for the supply problems, meaning Bureau of Animal Industry, Department of Agriculture, yung talagang magawa nila yung dapat gawin. And that's why, by the way, we eased up on importation of pork. And rice happened 2 years ago when rice was also inflating very high. No? So in short, nandun talaga solusyon eh.
Yeah. Nandun talaga solusyon. Okay, next group. Election naman. How is the upcoming national election affect the economy by Jose Ramon, and tanungin ko na rin to, how the election period affects market reopening? Guys, anyone can answer this?
I'll yield to the others muna.
Sige. Ritchie.
Yeah. We think if it's a clean election naman, that would be good for the markets. No? In terms of the economy, as what the presentations earlier showed, usually during elections, there's a boost to the economy. But it might be different this time around given that may mga mild lockdowns pa, unlike previously talagang mas maraming yung mga spending, mga Jollibee, etc. during those events, di ba? So it would be a positive in terms of spending. In terms of the result, for us, basta clean elections, that would be good for the market.
Good. Sige. At least, sinabi na rin ni Dr. Habito kanina that economy is stronger during election years on average. So I guess that's good.
But just to add to what Ritchie said though.
Yes.
Ang pagkakaiba nga ngayon, normally in the past, kaya maraming may push sa ekonomiya, ang daming perang umiikot, no? And it goes to a lot of things, t-shirts, mga pamaypay, mga pagkain pinakakain sa mga crowds na nagpupunta sa rally. Now, iba nga daw ang magiging kampanya, mostly on broadcast and social media. So, long story short, the benefits from the increased money going around the economy will be narrower this time. Unlike in the past elections where talagang mas kumakalat ang pera. So, yun lang ang problema. It may speed up the economy and the aggregate, but the benefits may not be as widespread as before.
Pero online na sila magpapadala ngayon. Online.
Sana nga, may paraan. Pero ang makikinabang, obviously, yung mga broadcast media natin, yung ating networks, of course. But ito nga, maraming mga magkakatrabaho as trolls and hopefully not too much purveyors of fake news and etc. Ngayon pa lang, nakikita na natin yung indikasyon yan. So doon magpupunta ang karamihan ng pera, hindi sa mga nagmamanufacture ng mga t-shirt at mga tarps at saka mga pamaypay and all that.
Okay, sige. But we're seeing mga parol tayo nakikita ngayon.
Iba-ibang parol naman, meron.
Next question. Real estate. REITs. Sem, tanong ni Miguel. I'm really into REITs right now. I was just wondering, would REITs be attractive once interest rates rise? Di ba parang bond na rin tong REITs di ba? Ano tingin mo?
So in the same way for bond, there is
Wait, Sem.
Wala na naman.
Darth Vader ka ulit.
Darth Vader ulit.
Unplug and plug ulit.
One moment.
Okay. Yan. Okay.
Better? Okay.
Yan.
Yes.
Yeah. Okay, so for REITs, you can think of it as bonds as well in terms of the cash flow that I was saying earlier. So for a particular REIT, the amount of cash flow that amount of cash flow they can generate depends on the land bank that they have, the amount of condominiums they have, so the income that they generate from rental income, from sales and from future acquisitions that the particular REIT will do, or amount of land bank or other condominiums and other properties that will be put inside that particular REIT, which will again generate future cash flows. So it's a hot item right now. I think there've been about 5 or 6 REITs that have been issued already, and a lot of them have been well received by the investor public. And I think REITs are here to stay. So I think it should likewise form part of your portfolio. So now your investors have stocks, fixed income, and they should maybe put a little bit into REITs as well.
Good. Ritchie, tingin mo, will interest rates affect REITs?
Yeah, yung sa REITs, aside from interest rates, I think yung as what Sem mentioned, there's a lot of other factors like ano ba yung portfolio of those real estate trusts. So if maganda pa rin yung prospects and they plan to put into that that can still be attractive for REITs. But it's really more of relative value. When you look at interest rates, if they rise, most likely bond rates would be higher. So how would those REITs compare in terms of payout, in terms of yield versus those bonds? So if REITs, again, would still provide better returns aside from the price return, then attractive pa rin yan. Kasi yung REITs would move their yield would move depending on the price As we have received, sobrang hot nga, laki na inakyat na. So naturally, their yields right now, if you will buy them right now, would be lower. And if interest rates do indeed rise next time, and then probably they can buy, like for example, yung RTB, recent RTB na 5-year, it was issued at 4.625%. So they would compare that 5-year every quarter then versus yung mga REITs, yung mga Ali REITs, Mega World, etc., MREIT, ano yung yield na bibigay. So in terms of labanan ng mga cash flow yan
So pagka sinabi mo kanina 5% na rate laban na yon. So more or less, is that the benchmark for REITs? Kung they'll say the REITs will give you a little higher than 5, pwede na rin. Is that what you're trying to say?
That would depend also on the profile, but kasi yung REITs mas malikot yan compared to the bonds. So yes, in terms of like other equities, we need that equity premium. Kumbaga, dapat mas marami siyang maibigay na potential return. So yung REITs, if you compare it with bonds, kung 5% versus yung mga fixed income right now nasa 4 or lower, then may laban yan. Kaya nga we've seen them nag-boom din, kumbaga. Kaya umakit yung mga prices because they're attractive versus other assets.
Yeah. It's becoming really, not just here, but around the world rin. So, ang ganda rin ang performance niya. Okay, let's get the other questions. Meron pa ba? Industry growth. Tanong ni Renato, which specific industries are expected to grow? Industries. Sir Habito, you mentioned finance, agri, tama ba? What are the industries you're looking at that will grow?
Like I said, yung the rollers, the real rollers would be agriculture, agribusiness, especially yung what they call smart agriculture, because there's a lot of new ventures into that. But in terms of the traditional economy, especially manufacturing, again, one only needs to look at the more detailed numbers of manufacturing to see what are in fact growing fast. And the ones I mentioned, the wood and wood industries, of course, our traditional exports, electronic products, chemicals, are actually growing upwards of 30 to 40% right now as of the last data that was available. So there will also be a lot of manufacturing resurgence. So I talk about those two wheels, digital economy and agriculture, agribusiness. There will be other specific sectors to look at. And I would invite analysts and of course even investors who have the inclination to look at the more detailed growth data from the Philippine Statistics Authority. Makikita naman doon kung ano yung mga sektor na mabilis pala ang pagbangon at paglaki. So those are things that are worth betting on.
So there are pockets of opportunities that we can see, in terms of different industries in the country that you're saying, no?
Yes, there is. By the way, on the REITs kanina, the real property development sector apparently is making adjustments already also in terms of the changed environment. I saw an article from Colliers, that organization that looks at the industry very closely. And then when they did a survey of their stakeholders and the investors, the players in the industry, there seems to be a general indication that there will be movement out of Metro Manila in terms of the real property investments. In fact, the number one province will be Pampanga, and then second will be Laguna. So in short, they already are making plans to adjust their portfolios to keep property development profitable. And the other important development is that they plan to go less into condos and vertical structures and more into so-called horizontal investments like house and lot and townhouses, that kind of thing. Nakikita siguro nila na nandun ang demand, so they're responding to that. So it will again, property development can remain pretty promising and therefore as a good investment through the REITs.
Good. Sige, I think we have one last group question here. Oy, the stock market. Siyempre, hindi mawawala itong stock market. Tanong ni Giancarlo. Ritchie, siguro you're the Deputy CIO of Sun Life. What should investors expect for the economy and the performance of the companies listed in the PSE for the upcoming 2022 year?
Okay. Sige, for our house view, although alam ko meron kayong tomorrow about equity, but for Sun Life, our house view for next year is 7,900. So that's around 12% upside from current levels right now. Main drivers why we think it's positive for next year is, again, yung growth story, the reopening. If right now we're reopening with all of those vaccines, we are really hoping mobility levels will really go above pre-pandemic. So it's really more of normalization, mas talagang mag-accelerate. But syempre, there's a lot of caveats there. Like for example, yung Delta during second quarter, then now yung Omicron. So hopefully, we can really contain, and as what Director Habito mentioned, the government can really sustain it and the economy won't really suffer. And we would see that PSE equities can perform positively next year. And in terms of PE ratios, right now what's working with the equity market is hindi pa siya ganun kamahal, no? So siguro kasi medyo battered na rin siya for the past few years, last year, then this year. So right now, medyo may room talaga for it to price higher for next year.
Great. So mga 7.9 ang house view ng Sun Life. That's good. Pwede na rin yun. I can work with that. Okay, at this point, we will allow Zoom questions live naman, sir, gentlemen, so that let's get some of the questions that are being flashed dito sa Zoom natin. Ladies, can we get some of them? Yan. Is it still advantageous to invest in fixed income during periods of inflation? Wouldn't inflation eat away at the interest coupons, and given the rates are low, will gains from reinvestment of coupons also be low? From Francis. Sam, you want to take this?
Yeah, sure. So that's the biggest, shall we say, the enemy of bonds and fixed income, which is inflation. So of course, the higher the inflation, it eats up. Yes, it eats up into your earnings. And one good thing to point out, though, with interest coupons, is that as they come in, of course, they don't all come in at one time. They come in staggered every 6 months, let's say. So it's possible that there is a way for you to reinvest these at higher rates moving forward. So that's one good thing that higher inflation will do. If higher yields go up, then you are able to reinvest also at higher rates.
Mm-hmm.
So that's one good thing that we can point out. So yes, one thing about fixed income though is that remember that in the end, the mark-to-market loss is you're going to be hit with mark-to-market loss or revaluation with bonds. But for as long as you do not sell and hold on to your investment, your maturity value is what you will get at the end of the term.
Mm-hmm.
So just hold on to it.
Paper lang yun. Sam, paper lang siya.
It's just a paper loss. Just don't look at your investment every day. Before you know it, you received another coupon anyway.
But enjoy the coupon.
Okay. Especially for those who will possibly be living on interest, enjoy the coupon.
Sige. Next, any Zoom questions that we have? Next, from Salve. Hello, Salve. Tuplito, has COVID disrupted our demographic story? Sir Habito, has it?
Well, I actually answered that partly when I talked about the stunting and how the escalated hunger could affect the incidence of severe malnutrition and stunting. You know, in many past briefings, I've talked about how our demographic sweet spot, which is this expectation, this projection, that we will have a preponderance of working age population in the next 2 to 3 decades. This, I like to warn people, can become a demographic time bomb because precisely of the stunting. You know? See, what the stunting does, it affects the 5-year-olds of today, and that's 1 out of 3 as of now, in their brain and physical development. So the kind of workers they will be when they are now and when they become working age will be very low productivity workers. So that's why, again, the relation to demography that I can think of here is precisely that threat of turning our demographic sweet spot into a demographic time bomb instead.
But all in all, sir, are you leaning more towards that time bomb or more tuloy pa rin ang, kasi we see a lot of, half of our population is still 24 years old, di ba?
Well, indeed. Well, to me, that's why it's imperative that we try to imitate what Peru was able to do. You know, Peru was able to cut into less than half their stunting incidence, from 28%. Tayo nga, mas mataas pa, right now 28.8 daw. In 2008, Peru had 28%. By 2016, they only had 13%. And what it took was simple political commitment by 4 successive presidents. So sana hindi ma-politicize yung mga measures natin to combat this. And government, by the way, is already very, very well aware of this, especially VP Lenny Robredo, who was actually the chair of a policy review group in a study that my firm made for the World Food Program that really highlighted the stunting problem. So alam na alam ni VP Lenny yan. And I know that she will be very, very putting very, very close priority to this. But I hope kahit magbago pa presidente susunod, patuloy yung commitment yan, which is what they did in Peru. And they work magic simply by working together and keeping a political commitment at the top level.
So we know it na, just have to have the political will to do it.
Yes, indeed.
Good. Thanks. Next. We still have time to get more questions. Tanong ni George, where do you see the value of US dollar headed next? US dollar, peso, dollar to, no? Will the movement of the US be a tailwind or headwind for Asia assets and Philippine economy? Strengthen, weaken, and how the movement. Are you in mute, Ritchie?
Okay, yan. Medyo nag-freeze eh. Yan,
Okay.
So usually when economies are rebounding, there's a lot of imports, diba? And with those imports, more need for dollar. That's why our view is for strengthening dollar, weakening peso for next year. So strengthening dollar, no? So right now it's around 50-40. So we can see $51 to peso, $51 peso next year. So weaker peso. And that would impact for the economy is, strengthening naman. It's really more about more imports. So we think economy will still be doing good. No? That's why nag-weaken naman. Basta the key there naman is we don't see abrupt, very volatile changes on the currency. That's why the BSP is really doing their job of trying to manage the currency movement so that it won't really negatively impact the economy. But of course, if we see talagang sumobra taas yung dollar, then we hopefully hindi naman like what happened in the 98 Asian crisis, then that would really impact negatively. But we don't see this happening. It's really more of the supply, demand, the flow of the currency. That's why we're seeing dollar to strengthen and peso to weaken next year.
But more weakened, but more of a control. Kasi 51 lang nakikita mo, no?
Yes, correct. That's correct. So controlled siya. It's really because of the economy rebounding. That's the normal result. Weaker because of more activity, more demand for dollars.
Yeah, okay. Sige. Are there any more questions pa from the audience? Questions for fund managers. So, are you saying not to invest in bonds right now? I just had my new investment in bonds last November. I think nag-RTB siguro to. I am a long-term investor. Thank you from Lourdes. Sam?
Yeah. Yeah, as mentioned earlier, actually, uh, investing in bonds should be a continuous process, especially if you're looking at the entire portfolio. And you can reinvest at various times. What you need to do is do it in a ladder way so that you have several maturities. Let's say, let's focus only on next year. If you can have a maturity every quarter of next year, so that when the interest rates do go up, you do reinvest at higher rates. So for me, you always have to be invested in bonds.
Yes, yes. Good, good. So, pwede pa rin. Pwede pa rin.
Pwede pa rin.
Di naman not to invest at all. It serves a purpose.
Yeah. Well, what's the alternative? No. Like time deposit rates right now are almost nothing. So we're, with the inflation at 4%, you're actually losing out already. So best to invest in bonds. And if you can keep it short, as I said, 5 or 7 years, buy there for now. And when interest rates do go up to where they were before, I saw, well, the RTB recently was what, 4.6. I remember before it was at 14. So I don't see it going back up there, but anywhere higher than where we are now is better.
It's good. Yeah. Okay, sige. We have a few more minutes sa ating program, but let's get last two questions na lang siguro. From Francis. If I were to invest in fixed income fund next year for the purpose of parking my funds, where do you think it is best to park my funds? Money market fund or bond fund? Ritchie.
Yeah. I think if it's parking, meaning to say, tinatime ba niya yung equity
For next
or
year
what?
pa.
Ganyan, for the purpose of next year, 1 month na lang, I think money market would suit that need, since mas more parking facility yung mga money market funds. That one talagang less volatility compared to the bond fund. But of course, lower upside, but you'll get returns naman while waiting for a better opportunity or waiting for an opportunity to invest on other assets, no?
Yeah, good. So, last question na tayo. Let's get our last question before I ask you to say a few words na lang to end your session. This is Mark. With yields expected to rise globally, what should I look for in selecting the bond fund that will outperform next year? And what kind of bond fund can they buy with yields going up? Sam?
Yeah. Well, the bond fund sector actually can be categorized by tenor or by duration. So some of them are, of course, on the shorter end, and some and then are on the what we'll call long-term bond funds. Between the two, with interest rates looking to rise next year, we would probably go more for the what we would call medium-term bond funds.
Medium term. Yeah.
Somewhere around the 3 to 5 year tenors.
Great. So yun. So I think that's about the time that we have. It's been a good discussion with you, gentlemen, fund managers. Regarding the Philippine growth story, will yields push higher? Mukhang it looks like going to push higher, but it's going to be tamed. So I'd like to thank you. Maybe last few words, Sam, Ritchie, and then Dr. Habito.
I guess one thing that I've seen here is that for the mutual fund industry, it's actually grown a lot over the past few years. A lot of it starts also with in terms of the number of investors invested, because we'll be bringing down the initial investment amount. So there's a lot more financial inclusion through the mutual funds. And one other trend that we're seeing is that a lot of them go for the money market fund, which is a very good entry point, especially for those who are not too sure yet on how mutual funds work, how to get to buy their investments. So at least it's a good thing to start off with the money market fund. Then as you get more comfortable and you are more comfortable with taking on more risk, then you can go more for the bond funds and then eventually go for an equity fund.
Yes, right. Sige, salamat, Ritchie.
Yeah, I think if one word lang diversification, especially since a lot of the investors here are really more of the direct equity, no? But as we've seen over the past few years, no one can really tell what would happen. Like last year, bonds were up when equities were down. So it would really serve you well to diversify, especially based on your risk appetite. So this is a good initiative of COL din of really bringing mutual funds and providing a lot of options for investors to diversify.
Great. Salamat for that. Diversification. Sir, Habito, for our economy, are we looking better? For your last few words, sir.
Obviously, two things will determine what the trajectory will look like. Number one is, again, our pandemic recovery. And heaven forbid, another resurgence, but we are hopefully much better placed to manage that. The second one, obviously, is the political exercise next year and what outcome it will lead to. So I can only hope that all of us make our choices in a way that has the future of our country in mind in terms of the stability of our economy and stability of our livelihoods, and of course the jobs of the majority of our countrymen.
Okay, with that, thank you very much, gentlemen, for this session. Ritchie, Sam, Dr. Habito, thank you for this. We'll get in touch with you again. Let me just give you a few of my key takeaways. We are actually in a critical transition period of coming out of the pandemic. We're getting ready for the opening, preparing ourselves for the Omicron, new variant, and soon we'll face major change in how things are being run in this country because of the election. And we will have a lot of things to do. We have a lot of work to do, a lot of hurdles that we have to face. And we need to address also the supply bottlenecks as demand normalizes. The central bank will have to keep a close eye and anticipate some of these inflationary pressures caused by this. But as Dr. Habito said, we just need to capitalize on those two wheels, the digital economy, and continue working on the agriculture industry, which is very relatively resilient. We still face a lot of uncertainties, but despite all the challenges, the discussions we had today anticipate better growth for next year. Fixed income investments are shared by our fund managers this afternoon will have to be managed appropriately with an opportunistic but also defensive allocation. Diversification is a key. And you need to take advantage of this increasing interest rates. As fixed income will continue to play a role in building and protecting our wealth. It will also address our short-term, medium-term objectives. So allocate some of your funds in fixed income to minimize these volatilities of portfolios and balance your risk. Our discussion about investing landscape for 2022 does not end here. Today, we were presented with a view of the macro economy, giving a picture of the environment and how the economic developments will pave the way for the direction of the markets. Tomorrow, we will learn about global investing and the prospects for local equities market. That's it for now. Thank you for watching. This has been Marvin Fausto. See you all tomorrow.